Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, cause that's what it takes.
All right, here we go. May, how are you?
Hey, happy Friday.
Happy Friday. Welcome back.
I just finished my seminar that I was doing at Columbia. The students are done and headed back home. They were amazing. I was so amazed that in 3 weeks they were so polished.
Is that your first time teaching a class? I forget if you told me
It's
that.
my first time teaching a class at that university in person. I've done some online stuff, but I've never done an in-person class. So it's pretty good.
That's cool.
Yeah.
I could see myself doing that for
I can see you doing
at
it too.
some point in the future.
You should do it.
The best way to learn something, May, is to teach it. That's what they say.
I think so. You should do it. I'm sure there's a university near you that would be really thrilled to have more.
We have, at the very least, we have community colleges that are always looking for good people.
Yeah.
But anyways, I'm kind of busy right now. I barely have time to keep my head water with everything I got going on. But maybe one day when things slow down.
They'll be lucky to have you. I know it. Yeah.
So did you have a chance to listen to the whole call?
I listened to the whole call and I've reviewed the 10Q that came out too.
Okay.
Really
and what I think let's talk about first, why on a Friday? We already covered earlier why the early release of earnings, the preview of last week. We kind of got the same thing we were expecting today, but why do it on a Friday?
I don't know. I mean, he's not on the edge of a deadline to have to get the release out. So we're like August 2nd. So he definitely, for whatever reason, didn't want to do it at month end, which is kind of a weird thing. He must have felt like he needed to do it sooner than later. I mean, he pre-released, so usually you would expect it shortly after. And maybe that he just didn't want to get in the way of a Friday at the beginning of the month, which is kind of weird. I honestly don't know why he would choose Friday, except that maybe he really wanted that Webush analyst on the call, and there's like some backstory, or maybe there's somebody.
Do you think that they coordinate with analysts like, hey, when are you available? And oh no, Adam, I can't do next Tuesday because I'm going to be on this other call. Do they do that?
I mean, it's very rare that they would do that, but since there literally is one analyst on the call every time, or two analysts, they might have been trying to just try to make peace or something. I mean, it's such a random thing. And she did end up on the call. Like, to her credit, as much as we take the piss out of all the analysts on the street, the fact is she could have gone home. It is Friday. It is the summer. It is you know what I mean? So I can't even be that mean to her anymore, because that's actually kind of a big deal that she showed on a Friday. You know what I mean?
Do you know who wasn't there?
Who wasn't there?
Eric Handler from Roth NKM, but he was on Cinemark's call this morning.
Interesting.
The guy that, totally botched AMC's forecast.
Interesting. Your friend.
My good buddy, Eric Handler. Yeah.
I don't know why he was so rude to you. It was so weird. It's like...
Because I think if I could imagine him, he got that deer in the headlights moment in his office. Like, who is this YouTuber trying to correct me? Oh shit! What if I didn't include that? I got to get off the call. You're not a client. Bye. He was pretty good, answering questions till I started nailing him to the wall, and I think he's like, oh crap, and I got to go. I got to go.
You know what? The thing is, everyone makes a mistake. His was fairly public, and that.
Yeah, I wasn't even mean to him. I'm very professional when I interact with people.
You are nice,
as long as they're, as long as they're professional. you're going to be a dick, I'll be a dick back. But
I'll tell you the one thing that they could have pushed harder on, because I myself am curious, is there is a lot of stuff in the 10Q on the deal. And even though I think it's probably done correctly and in the right way, there are some things where I think they should have asked harder questions. I wouldn't have mind having someone ask a round of questions on the structures. And it's interesting because they were like the AMC team was definitely prepared to answer those questions, because the way that they said, hey, read this. There's a lot in there. It's not straightforward. I would have thought that they would have been prepared to read that. And I was a little disappointed. Not disappointed in the analyst, not disappointed in the management team. Because if they feel like they've explained it and it's more about like reacting to questions, you
were disappointed in the analysts not asking them more pressing questions, is what you're saying.
Yeah. Like, I think I'll probably write into IR. It's been a very long summer trying to do a little bit of both. Oh, Sparky's on here. Hey, Sparky. We should just bring him up and see if he has questions too. I don't know.
May, do you have any thoughts about the Form 13s that were filed yesterday with Discovery Capital and Mudrick?
Yeah. When I looked at it, it actually just looks like the stuff that, because there are 3 named parties that were going to do a secondary offering anyways as a function of receiving the shares. So this might just be the official date that they receive the shares. Sparky has a really good point.
But they bought bonds, May. They bought $414 million of bonds, which can be convertible to shares.
Yeah.
Or the conversion price is effectively $5.66.
Yeah, they had said that on the announcement. I think originally something like it was like I think in that what is it? The form that describes the deal, it looked like it recreates the price at $5.66, but then it has a selling option that is closer to $8, if I understood it correctly at the time.
So my question is really what we're struggling with as a community is, did they just file these forms like saying, hey, in the future we might have these shares? Or do you think that they already converted some and took shares and that debt is now off the balance sheet? And if that was the case, wouldn't that have been disclosed today as a subsequent event?
Yeah, the debt's not gone. The shares are still there. Like that's not how I read that form at all.
That's not how I read it either, but there are people saying, guys, they got the shares, the debt's gone. Oh yeah, we got diluted, but these guys got the shares, therefore the debt's gone. I'm not seeing that in the form, but I'm just trying to have a conversation with anybody. Like, what are you guys seeing? Are you seeing anything different? Sparky, I think, agrees the debt's not gone.
Debt's not gone. So it looked to me like the form that you would file, because technically you do have dilution through any kind of convert that exists. So you have to actually file that those shares exist. And that's what that looked like to me. Some folks are saying read footnote 1. I think that's the footnote 1 that actually references the conversion. So I'm not sure, Dink, how you're going about it. But I would agree with what Tony and I are saying. So just in case that's the unclear part.
Yeah. I read footnote 1. I've called it out to May. I called it out to Sparky. I spent hours today going through this and came up with 3 possible scenarios. And the most likely one to me is the debt is not paid off. I don't even think they have. I don't even think they have the shares.
Yeah, it's just that really looks like what you'd expect if it's a convertible bond. I mean, I don't know what else to say other than it's not been converted. Yeah, guys. The shares have to exist, right? You can't, if there's nothing to convert it to, or if it's not clear what it's converting to, then it's not, you have to file. I don't understand.
The bond exists, and the conversion will exist at some point.
But the shares have to exist. If you don't create the shares, which is what
the AMC registered the shares exist, but would someone that just paid $414 million for bonds convert them at a loss when their effective price of buying them was $5.66 a share? That's really the question to ask. Like, Does that make sense to anybody?
Yeah.
Uh,
So Dink is with us. That's what he's just trying to clarify, that you would see it very clearly. I should not read that too much on the right. Dink, thank you. Yes. If you look at footnote 1, it should really be clear. I wonder what it is that has everybody so confused. Why do you feel like, what is it exactly that we're reading
well, I mean, just the fact that they filed the form, and so people just assume, therefore they must own these shares. And where did those shares come from? I mean, Sparky said maybe they came from previous debt for equity swaps, which is okay, maybe, but they have 10 days to file after that, and those debt for equity swaps stopped in May. So less likely explanation for me, but I'm not going to rule it out. I'm not saying I have it all figured out yet. I'm just trying to work through this with all of you guys like we always do.
Yeah. So Sparky's writing, this debt will be outstanding for years. It's a long option, 5+ years. It's worth far more than just taking a buck profit at 166. Yeah, I agree with that. That's what it looks like to me. And then Sparky had an earlier comment that was really good, where he's thinking that the reason they did it in the evening instead of the morning is just because they didn't want to have the conflict with Cinemark. I agree with that, but I mean, they could have done it. I mean, okay, so
could have done it Monday morning or Tuesday morning next week.
I agree. See, that's the thing, is I would have thought Monday morning, because why do they want to do it on I mean, unless maybe he's going on vacation, like maybe
I was going to say that as a joke. Maybe, I mean, look, Adam seemed ecstatic about the June numbers. He probably like, honey, book that suite in Vegas. We're going on Monday. We're going on Saturday.
The Europeans, like they do the entire month of August off or something.
I mean, that would not surprise me. Like I'm a little bit perturbed. I'm not real happy that he focused so much on June. On the one hand, you should celebrate small victories, right? And they clearly were ecstatic about June, and they probably were living through hell in the executive suite in April and May, right?
Yeah.
Got no money coming in, and then all of a sudden, just like somebody turned on the faucet, they were super happy about June. But when you focus so much on June, I'm afraid what retail hears is every month from here on out is going to be like June, and we're still going to have some ups and downs. I'd rather people focus on a quarter or a year, not a day or a weekend. I don't even like it when they're, we had the biggest Friday of hot dog sales in the company's history. Just stop with the one-off stuff. I know it's important for them to celebrate wins, and that's good. They stack up over time. But as investors, we need to still like keep our common sense when we're hearing this stuff. It doesn't mean that we're out of the woods on Monday, is what I'm saying.
Yeah, I mean, how this trades, this market is so weird right now. I don't know how this trades. I do still have the same opinion on Odeon as far as things go. It'll stabilize once Odeon is clarified. The thing that bothered me, though, in the 10K or the 10Q, it doesn't bother me so much as I would have loved to hear questions on it. It actually is the portion on the structure with the is it the Muvico?
Yeah.
That is written like it must be the case that there's just not an easy way to write it, and so they really should have asked questions about that, so we can kind of go to that section and take a look.
Let me. Do you have a page? I've got the thing here, or you can do a screen share since you're talking to it. If you got it open.
No, it's better if you do the screen share. You highlight stuff. It's so nice.
I have mine open on subsequent events because there was some August 1st stuff.
That's what page is that? Because that's
32 is what I'm on right now. Hang on one second.
Yeah. So it's not that I have a problem with it so much as it's not Like I wouldn't mind chatting through it, and I would have loved it if somebody bothered to actually do more on it. Oh yeah, that's all the stuff. So Muvico, we knew that they were doing Muvico, and if you, it's weird because I wouldn't have done these bullet points in this order because I think that's part of what makes it difficult. So Muvico is so they have the way that they have it written. The structure of Muvico is like bullet point 4, which I don't. I wish they wouldn't do that. So Muvico, or maybe it's even farther down because you would like what drives me crazy is the
Here.
order off. Yeah. So where they talk about the fact that so the paragraph right underneath it in connection with the formation of Muvico, among other things, transferred. So Muvico, what is it? It contains a bunch of stuff, right?
Right. Yeah.
And then it describes that it's a subsidiary of Centertainment. Oops. And then it describes.
Yeah, you're gonna don't. Hey, May, I got a lot of complaints about your phone beeping last time. Just FYI.
Sorry.
Put that thing on stun.
It's on silent. I don't even think I was guilty. Sorry. What can I say? I'm a popular girl. Like
I know. I mean, it's a Friday night. It's a Friday night, guys. Let her do her thing.
Yeah, exactly. Okay. So you see all the things that are in it. We don't know what's 175 theaters are in Muvico. So that's kind of a curiosity.
I've been waiting for any hint on that, and we got nothing.
And then Centertainment is fully owned by AMC, right? That one we were able to due diligence.
It is fully owned by AMC, and it's listed in the 10K in a attachment called subsidiaries.
Yeah, and so then you have complete a follow-on open market purchases. So the debt, the term loan is with Muvico. It's not with it's with AMC via Muvico, right? So that's the first piece. That's
the term loan and the 414 exchangeable notes. Both are through Muvico.
Okay, so then the curiosity becomes, because you have conversion in these pieces of debt, what is the percentage of Muvico that is owned? That's really my question. And I don't like, is it just me missing this one very important piece?
Muvico is a wholly owned subsidiary of Centertainment, which is a wholly owned subsidiary of AMC.
Yeah, but if the debt is convertible to someone else, that would imply that they are essentially fundraising out of Muvico, which I think is the right call, right? So if I understand this correctly, right, they put a convert in Muvico. So the shares that are converted, are they converted to Muvico shares? So someone is actually taking ownership of Muvico and not AMC, which is clever because it means that you dilute Muvico, you don't dilute AMC, right? So I think that's clever. That's the first thing. But it's only clever if we know what percentage ownership you get of Muvico. It's not clever if you get a percentage ownership that is not cool. But it is extremely clever if you get a percentage of Muvico.
I mean, those are good questions, May. I didn't read anything other than they convert to AMC common stock. Not that anybody's getting. So
then there's no problem with Muvico then. Yeah. Okay.
Yeah, there's no Muvico stock.
Oh, okay. Then my bad. I'm reading it totally wrong then, and you've got it correct. Then there's no problem. That's nice. I'm happy.
Okay. I'm happy you're happy.
I think I've got it right. So there's no funky thing at all, even though that would have been very clever, to be honest.
If that were the case, if it was a completely different company with a completely different stock, a lot of the people that were complaining on day one about Muvico might have had a legitimate gripe, but it just looks like a subsidiary that's rolled up under the parent for purposes of bundling all these assets and enticing lenders to move to the new debt deal.
Yeah. It's still kind of a funky setup, so I'd like to better understand it. Sparky agrees with the two of us as relates to, it looks like it just turns into AMC stock.
The way S&P wrote it up, if you go read the credit report, May, is they bundled the assets under Muvico to encourage lenders to move, and if you don't move, you're left out in the cold with basically
Oh,
uncollateralized debt.
that's smart.
And that is why we saw also this week some of news reports that some of the lenders are not happy with this new plan because they're going to be left holding an empty bag.
Okay, that's really smart because that's how he got the 98% participation rate. That's what it is. Because on the call, because we didn't know. That's something that Sparky had mentioned, that they were leaving some for 2029 and 2030, but also that they kind of announced a certain amount of participation that's already agreed to it. So that was how they did it. Was they moved the assets to Muvico, which inspired everybody in first lien to just agree. That's how they got the 98%. That's smart. That was really, I mean, okay. And this one, as much as you guys have always, not you guys, because not you specifically, but as much as the haters have been really nasty about the debt holders, blah, 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 management is always doing something for the debt holders. This definitely wasn't for the debt holders.
Yeah. I mean, clearly not all were happy, but once I kind of actually understood it, assuming I understand
Really
it,
clever.
I said this was actually a pretty ingenious move on the company's part.
Yeah.
Because as we've been talking about, they're kind of in a tough pickle here to refinance this debt, and they came up with a way to do it to nudge everybody into participating.
Anya wants a re-explanation of what we talked about from the last time. So the timing, so the pre-announcement had to happen no matter what, because it would have been, I mean, not had to happen no matter what, but you would have really struggled to keep all of the stuff that you shared with the debt holders quiet. So, it's just smarter if you do that much refinancing, if you're doing that much corporate action and that many people are actually getting to see your financials in advance of the close. It's just smart for you to come out and pre-release. Having pre-released, you can't wait that long between pre-announcement and then conversation. Why did it have to be Friday and not Thursday or like Monday? That one's a little bit funky. I don't really know a great answer to that, except that there was some kind of scheduling conflict with doing it anything other than on Monday morning or Friday evening. That part is a little bit strange. I'm not going to lie. It's not normal to have a conference call on Friday night in the summer for earnings. So that one I don't know per se. And any conjecture really, it probably is just scheduling.
All right, so that was something. The Muvico was something that jumped out at you that you were worried about in the 10Q, but I think we got that sorted.
No, that clarifies it for me. Now that I understand the other part of it, I didn't realize I haven't read the credit report yet, so that makes a lot of sense. That was very clever. We're good.
Any other 10Q stuff from you? I mean,
no, I was really amazed though, but at the margins on the, I didn't think he was taking the concessions possibility seriously enough. So I'm actually really thrilled to hear that from the call.
Concessions or concessions and merch?
Sorry, the merchandise sale.
We got a little hint today. I mean, I heard him say $50 million. We took it from 0 to 50 million. That's not an inconsequential number. And if they're talking about doubling it, now that they've got a few years of building up some experience in sourcing it. Like, I didn't know they had to pre-order 8 months in advance. That you got to probably lay out some cash to get the subcontractors to build the stuff, right? To manufacture it.
That sounds like the wrong Chinese manufacturer. Girl. No, I'm just kidding.
and you don't want to you don't want to over order your merch, because you don't want to be stuck with a bunch of inventory that you got to write off or sell at a loss. So they're kind of learning as they go how to do the supply chain on that.
Yeah. Okay. So here's how I heard it. Tell me what you think. 50 million is half the debt load before, and now it's probably 2/3 of the debt load. So literally they're already at a point where so that's, was that a quarter, 50 million a quarter? Or did he say 50 million a year? I couldn't remember.
He said 0 to 50 million. So I'm assuming that's an annual number.
Okay. So then if you were to say, if he's going to double that, then let's call it 100 million a year. So that's 1/3 of the that'll be about 1/3 of the debt load, right? Is paid for just by the merchandise if we get
Debt's in the 90 million a quarter range.
No. After all the modifications.
Oh, I haven't recalculated the new debt.
Yeah.
You're talking about the debt service after all the changes?
Yeah. I'm just doing a fast calculation. So I would assume, well, that's 50 million revenue. That's not, the profit margins. So then really profit of 50. Okay. So this is how I'm thinking about it, right? So if they used to have about 90 million a quarter, then they had about 360 million in interest payments before.
Right.
And I'm assuming that they now are closer to like 275, something like that. I actually think it comes down that much since you're going from 12% to 6 and 8, but probably 6. Yeah. So let's call it 275, right? If you are able to double the merch on revenue, but you're getting 45% margin, then let's call it 50 million. So you've got what, like a fifth of the debt paid off, but then you still are ramping up merchandise.
Yeah, you're ramping up merchandise. You got more movies. You got more tickets. You got more concessions. I mean, the setup is really good if the industry and the economy cooperate.
I think he could. I honestly think he could do a lot more, and I'm actually surprised. It's still a business, so you can't do it all at once. But given what's happening in retail, I think that his timing is excellent. You know what I mean? So like you've got a lot of physical stores going to the wayside, and then you've got only a certain amount of space in something like even a Target and a Walmart. Well, Walmart, you've got plenty of space, but you've only got certain amounts of space for this type of stuff. And then, I think he really does need to get the online sales up pretty aggressively. But then it just seems to me like there's a way to do this even faster. I don't know. But then I always think that, and it's different when you're actually trying to operate a business,
I want to bring up Sparky's comment because the 414 million, the PIK toggle, the rate got reduced, but on the term loan, the rate went up.
Oh, that's true. And that's a bigger loan.
So S&P's general comment about the new deal is they expect the debt service to remain at about the same level in their early assessment.
Interesting. That kind of makes sense because the loan facility was at 8 and change, right? And now it's what, 10?
I can pull it up here. Hang on.
Yeah.
Uh, 8.4. You're right.
That was before, or is that?
This is the old one.
Okay,
due 2026.
Yeah.
And it went up. The term loan went up in the new deal.
Okay.
So, well, I'm just calling it.
What's the new rate on the term loan?
Sparky, do you remember off the top of your head, or are you guys going to make me look it up? We talked about this. It was it's
here. Let me see if it's in
a base rate plus some.
Oh, right. So it's dependent. It's fully dependent on the floating rate. So it depends. So it starts out around 10 and change, and then comes down. It's like
if the Fed lowers rates and it comes down, then we start getting in good territory, right?
Yeah. So we need rates to come down to 3%. That's what we need. Everybody send out vibes to the Fed. Maybe the market was weak, but maybe that will make sure that we have a September rate cut.
Cancel Bubble says, did they call out popcorn? I looked through the 10Q real quick. I did not see any breakout on popcorn and candy. I think, maybe
on that. Because
maybe in the next 10K if we're lucky, but I'm not expecting it. My
suspicion is that merchandise was so profitable that that's where they're going to go for the short term, and they're going to calm down on these other things for just a little bit before coming back up.
I think here's my simple view of looking at this starting up of popcorn and Walmart and Kroger and everywhere else. you're starting up a business basically, and there's a lot of cost with product development, supply chain, packaging, just a lot of costs that maybe they're not even. I know retail built it up into we're going to make $1 billion in the first quarter from selling popcorn in Walmart. That might have been over exuberant, and so when it gets to a point where it's worth bragging about, they'll tell you about it. Right now, it's factored in the revenue buckets, one of them.
Yeah,
It might go ahead.
Oh no, go ahead. I'm sorry.
I was going to say it might be break even. It might be a small profit. It might be a small loss. I don't know, but it is in there. They're just not breaking it out to us. Go ahead, May.
I mean, because they do have limited resources right now. I mean, obviously, if you look at working capital, it's still negative for this quarter. But apparently, June was so aggressive and so positive that they probably are working. They might be working capital positive by next quarter, which is pretty impressive. We know they're going to be free cash flow positive, so it should flow through correctly. But my suspicion is that with merchandise, you can get most of the cost covered. So let's say, for example, Disney shut down all its stores, right? It shut down a lot of its stores, and it's going to release a movie. It has the choice to either sell through Walmart or sell at the point of sale, which, the point of the movie. So I would think from Disney's perspective, if I launch a movie and sell the merchandise at the same time that someone buys a movie ticket, that's very interesting to me. And Disney has the capital to buy the merchandise and fund it through. Then it's just a pure build the distribution pipeline, which is a lot cheaper than what has to potentially happen with popcorn and chocolate for the near term. I think they still do popcorn chocolate, just like you said. But if it were me, I would probably spend the money on building the online point of sale for the merchandise, and then trying to figure out what it would take to distribute the merchandise to the correct theater.
AMC hasn't even really tapped that potential market yet, have they? They're working with some small company up in the Northeast. I researched this company. They got a little tiny office in a nondescript office building, and they handle for multiple movie companies getting the licensing, setting up the manufacturing, ordering the product. So I think AMC subcontracts this all out, but just like they hired a VP of concert distribution, maybe they at some point hire a VP of merchandise and go down the path that you're talking about, like really, really stretch the wings in that area.
Yeah. I mean, it's so amazing too, because there's so much space in an AMC
in the lobby.
In the lobby and all that stuff. So if they needed to just have a locker for storage for that, it's not a complex build, depending on how they ultimately decide to do it. So I think if they get the merch right, the ramp up on because the profit margins are nice, right? They're not, if you think about it, I mean, the profit margins are nice.
Yeah. I mean, what do you think it is? Probably like at least
20,
25%.
He said it was 45% on the call because they're selling out.
Did he say 45% profit margin?
That's what I heard. If I heard wrong, please put it in the comments, okay?
Did you guys hear that? I didn't hear him say a profit margin percentage, but I mean, that would be amazing.
Yeah, he said it was similar to retail profit margins, so like 45% is what he said.
Wow.
But if it is, even if I heard it wrong and it's what you're saying, 25 to 35%,
that's just my guess. I mean, I've always trying to guess what's the profit margin on merch. They never tell us what's the profit margin on popcorn and chocolate covered almonds. They never tell us.
Yeah.
I'd love to know those, the answers to that.
Yeah. If you guys heard it, please put it in there. We'll just find the transcript another day.
Anya says he said handsome profit. Yolo Ono wants a Markets with May t-shirt. Hey, I keep on seeing people talk about your wine glass. Can we see your wine glass?
I feel like I should co-brand with a wine company, a big, gigantic wine glass.
Oh, that is a nice. Yeah, look at that.
How far back I sit relative to the wine glass.
a perspective fake out. But yeah, you need Markets with May etched on your glass. And
you know what it is? AMC. I'm just doing this to promote AMC wine. Maybe they can send me AMC.
Yeah, what's the deal? When are we getting our wine? I guess I listened to that guy from Boston. He said AMC was buying a vineyard. Maybe we got to wait a few years for the
For the grape.
vines. We got to wait for the vines to grow, guys. It's a process. But
Oh, Chico's giving you crap. We listened to the call. There's a lot to listen to on the call. Yeah, so the merch was really exciting to me. That was probably the biggest thing, because I didn't realize they were going to continue to expand that. I didn't even think they were going to do anything with it. But the 8-month thing, maybe that's why it was so delayed. They were really trying to proof of concept that. And you got to imagine that some of the merchandise is higher margin than others. Like right now they're mostly doing those buckets. Those buckets are still made out of plastic, and there's a mold and there's all that stuff. If they were doing like a t-shirt or a ball cap, those are probably really cheap, I would imagine, depending on what you sell them for. And if it's Disney, they always sell them for way too much, but people buy them nonetheless.
the reason, you said 45% on merch, May, I don't know. I mean, this question came up on my live stream as we were listening to the call, and I asked them, did he say a number? And they all told me, no, he didn't say a number. He said handsome profit. So I was just giving everybody a second.
Guys, okay, that's not Tony's.
I was giving everybody a second chance to tell me that he said a number.
Oh, so Chico has it 40 to 50%.
Chico says he had it. All right, Chico heard it, so I believe Chico.
Okay.
I'm going to go back and listen to that call again just before I do my weekend video update.
Yeah, I was shocked. I was shocked that the margin's so high, but I think if that's the margin, then yeah, we need to get it online as soon as possible. And that makes the most sense to me, is if you're buying your tickets, especially for some of these cult movies. Do you know what I mean? If you buy I think you have to be careful with hats, because people might not be able to see behind you and somebody will want to wear it. But with certain stuff that would work, really well. Maybe a blanket would be nice for the ladies. It's always cold.
They do have blankets now.
The vending machine, right? So was it like a blanket vending machine or something?
I haven't seen them at my local AMC, but I saw that they sell blankets now. Jason says, was anything said about Hycroft? No. But guys, I'll do a video in the next week when they release their earnings. They're due any time now. Hycroft is not updating their plan to investors till 2025. So no one knows if Hycroft is going to be going into mining, if it's going to be a profitable endeavor. We got to wait for them to do their feasibility study, finish it, provide us all that data. It's going to be 100 pages. It's going to be 100 pages. When we get that, then you'll know what's up next with Hycroft. So you got maybe 6 months to a year to wait to find out about Hycroft.
The good news is so far the price of gold is going up. So
yeah, as long as gold and silver stay high, that's good. Bears and bulls, just hold your horses. Let's wait till they get the report done, and then we'll see.
Yeah. Okay, so some other people are coming in at 45% too. Anya, he was referring to handsome profit with respect to all this. I think he said handsome profit, and then he stuttered for a little bit and then said 45 or 40 to 50%.
Beautiful. I love to hear a number that high, May.
It's a huge number. Yeah. He's probably got a little bit of internet build out, but it can't be that much. My gosh, how long? If his back office cannot, or if his programming team can't add a SKU for merchandise easily on some of these movies, that's a place all of us could help him at. You know what I mean? Because it shouldn't be, his system shouldn't be so difficult that he can't. But then, it's probably coordinating with all the other systems as well. You guys are funny. You're already ready for all of the shorts that are coming out with their potentially, their potential, what is it? The YouTube, like line items to try to drag the people in.
We need to get better at
Profit.
merchandising this stuff. Like we need to be able to order like Handsome Profit T-shirts and have them ready to go the next day.
Oh my gosh, I can see the chat AI like images that you guys are going to come up with. I can't wait for the memes on this.
VRO says, when is Q3 for AMC? So we're in Q3, July, August, September, and we'll find out the results in what? Early November.
Yeah, they always do like a November one, I feel like.
So go see a movie. I mean, this counts, and I'd love to see this September be the best September in the history of the company. But we really need what's that movie? Damn it, Michael Keaton.
Mm-hmm.
God damn it, my memory's failing. Beetlejuice. We need Beetlejuice to outperform. We need Beetlejuice.
You don't think Harold's going to do it? You don't think Harold on Purple Crayon will do it?
I'm not going to watch Harold. I'll go watch Twister. I'll go watch Twisters or Deadpool a second time before I go watch Harold and the Purple Crayon. But for families with kids, I'm sure it's a great movie.
I'm just saying, if you don't want to run your AC so high, get on over to AMC.
I know.
If kids are too warm in the house, think of an afternoon activity like AMC.
We went to go see Despicable Me 4 on Monday afternoon, and we saw Trap yesterday afternoon. And both times when we were walking from the car to the theater, my wife was like, God, it's so freaking hot out here.
Yeah, especially where you guys are.
Yes.
It's hot here, but yeah.
We get spoiled, because obviously we don't work outdoors. And then when you walk outdoors in the middle of the afternoon, it is. And fortunately this year, the AC, the air conditioning at AMC have been working. I haven't seen widespread reports about the air conditioners breaking. I've seen some sporadic reports.
Wow, there's not a lot of Harold and the Purple Crayon lovers. I like Harold and the Purple Crayon. I think I still have the book. Such a good book.
Right.
I think if AMC has the wine, they should do this wine glass, though.
I'll be right back, May. Hang on one second.
Okay, let's see if we have any questions. Beetlejuice. I want to see Trap. Terrifier 3 will be the one. Deadpool. I still have to go see Deadpool. I've been actually a little bit busy, so I definitely did that. Does buying gift card? You know what, Chris? Actually, I did notice that the deferred revenue line item is a little bit light relative to the previous year. So please do actually go out and buy gift cards. It will show up in deferred revenue, which is technically a liability, but you need to subtract it from working capital, or else you get a crazy picture if you add deferred revenue to calculate. It. So it is actually great. If you guys want to support the company, you can also buy gift cards in advance for AMC. And honestly, one of the ideas that I really think and I'd like to see AMC do is that they could do a huge promotion on gift cards to try to pre-sell more aggressively and get that pre-sale item up. I still believe that. I know that sometimes there's a timing differential and they make you retain the liability a certain way. But if they could do, Adam, Aaron, if you're listening, okay, number one, make sure your wine glass is really large at AMC, because apparently that's a thing. We'll all know it's because you're thanking me. Thank you. Right? Number two, Adam, Aaron, if you're watching, okay, if you could do like even the smallest discount, either for parents who might be wanting to thank teachers, or alternatively at the holiday season, so that your deferred revenue goes up pretty aggressively and you get that cash to spend on whatever it is you need. I think that would go over really well.
They do. I have seen them do some promotions on gift cards around the holiday, May. Yeah.
Oh, they have. I didn't see it this last year. Did they do it last year and I just missed it?
I can't say for sure that they've done it every year, but I have seen them do it.
I think they should do it.
Did you already answer the question on the screen about how it impacts the financials?
Yeah, it'll show in deferred revenue. And then once you guys go to see the movie, it will book. And then you have to read the back of the gift card to know exactly when. There is a time period where if you don't redeem your gift card in time, then you don't get to redeem it anymore, and the cash just goes straight to the company. So that is another way.
Yeah, and unlike what the clickbait channels were telling you a year ago, deferred revenue is not AMC hiding money in a secret set of books so they don't have to report it.
It's gift cards. That's what it is.
Lord.
American Discovery. We talked about it a bit. Vaughn, we did discuss it. You can go to an earlier period or in brief. It's not. There's no sale that's happening. The sales are very straightforward when you see them. So you've got kind of a mixture of things going on. You've got the fact that there is still some debt that will be converted. So it's convertible debt as a part of the refi. And then you do have the fact that there were some shares that were awarded for past debt that's already been done as the debt for equity exchange. But when the sale actually happens, and that those shares have been awarded, we saw that earlier. But when that debt is actually sold, because of the size of these guys, they will have to file the classic filing. So we'll all see it coming to the marketplace.
I think the key for me, May, was in the footnotes, like footnote number 1 or 2. It said, based on a float of 361 million, if you added these in,
that's what it would be. Yeah.
The float would be 364 or 380, whatever. And then our percentage would be this. It was a lot of if. It didn't say based on the float of 390 million, we own 6%.
Yeah.
It was very weird wording that was like, I don't really think they've converted these shares yet.
No, they're not converted yet. They just have to hold them in existence. Otherwise, it's unclear where the shares are coming from.
All right.
But, it was a positive call. We'll just have to see what the market does. I mean, I really think someone on the management team was going on a big, long vacation, and that's why. And they kind of probably deserve it because, people need to take breaks, especially if you're like mostly trying to finance a company out of bankruptcy the entire time. It's a little stressful.
Chico has a good question, and this came up on my live stream earlier also. When is AMC going to get a credit rating upgrade?
To single B? It's got to, for single B, what'd you read in the S&P credit report? How did it look?
They said basically, May, they're going to let some time go by, probably a couple months, and they'll reassess the credit rating as we kind of see the fallout of how this new debt deal lands and how the box office and earnings go over the next quarter or two. So
yeah,
kind of what you'd expect, right?
Yeah. So I would think that if they show 2 quarters of improvement, they got a shot at single B, is what I'm thinking. Because single B is still a pretty nasty rating, if we're honest, right? But they got a shot at single B because they have a lot more time for the longer dated debt. I think if we're talking double B, we're gonna have to see at least 1 full year, and you're gonna have to see a reduction in price in a free. You're gonna have to see. First of all, you're gonna have to see working capital positive. Okay, you're gonna have to see that working capital go positive. Right now, it's still negative, and also you're gonna have to see EBITDA positive for a much longer period of time, and you're gonna have to see some additional debt load reduction to get to double B. We're not getting to triple B for a little while, guys. That's going to take a long time. Even a crazy cash flowing oil company will take forever to get to like. Do you know what I mean? If I think about how long it took the pipelines to get to triple B, but you got a shot at single B probably in 6 months to a year. But quite frankly, the debt through 2027, which you'd expect since now the bigger debt is rolled back to 2029, 2030, the debt is really trading as if there's a possibility. I mean, it's trading right now right at triple C minus. Sometimes it trades between triple C minus and single B. So it's not, it's definitely significantly improved financial conditions. Is credit rating that big a piece of the stock price? Chris, it's only important right now because the whole the credit rating itself is not going to be as big of a deal. It was important before the refinance because basically that was the debt holders telling you they still thought the company was going bankrupt. So between the time the refinance was the day before the refinance was announced and then when the refinance is announced, if you look at the 2027s, they still were trading busted. You can kind of look back at my Twitters, but I think there was still about, so triple C would be at about 15%. If your debt rate, if your yield to maturity, which is how you would the correct version of the number to use, if your yield to maturity is around 15%, which is suggesting that you're yielding 15% per year. Don't worry about all the details of that. But if so the debt for AMC 2027s was still trading at like 24, 25% on a given day, and sometimes still going back as high as 26%. So that is for the debt markets huge. That's like a 10% difference. That really is what they would consider busted at that point, meaning a lot of people still thought it was going bankrupt. As soon as the refi happened, the 27s traded all the way up to like, they went from like 25 to 20, and then now they're already at 15. So they've really covered that spread. Maybe they're at 16 right now. They've covered that spread. And what they're saying is this thing isn't going bankrupt. And, I mean,
I think what they're asking me though is like, why do we care what AMC, as common shareholders, why do we care what AMC's credit rating is?
Because if they do need to refi any additional debt, the debt price just went down by 10%. I mean, the fact that they got it refied with the debt ratings where they were and where the price of the debt was trading. So everybody that might want to criticize whatever was done, realize that if they had gone to a bank for that loan, your rate would have been 25%. So that would have been a big, you know,
and that's why I've been talking about the debt and the bonds more over the last 6 months or a year, not because like the tinfoil of people are saying, not because bond holders or debt holders are paying me. No, because as common stockholders, us, it's important for us to understand how debt and the bond market works so that you can understand the struggles AMC is dealing with getting this debt restructured at a rate that is palatable, because it affects our income statement, that interest charge, how much money they burn paying interest. That is how it all comes back to us as retail stockholders. So you should understand something about bonds and the debt market. You can't just ignore it. Or you're going to be one of those people like, I don't understand why the price isn't going up. There's a lot of moving parts in a play like AMC, unfortunately. Still.
Yeah, so that first line of credit that's being done at LIBOR, or sorry, not LIBOR. I don't know why I said LIBOR. At is it SOFR? Are they doing it at SOFR? Or are they doing
I forgot. SOFR, is that it?
Yeah, SOFR. So they're doing it SOFR plus 5 or 6%, something like that. 5 or 6% is actually a double B, is where the double B trades. So that is already really nice. But that makes sense because they're first lien, so they would take your assets first, essentially. If you were to be able to get, so from double B to single B, here, let me look it up. It's a huge jump. Here. Okay, so let me share my screen then. Okay, so I always show this on my Twitter. Please follow me on Twitter, right? But so here is the, oh wow. Okay, so double B. Here, let me do this a couple different ways. Do you have a cat?
Yeah, he's hungry. Time to feed the cat.
All right. So so just to give you a sense for it, right now they're triple C. So SOFR, right, is basically going to be similar to the risk-free rate. It'll be similar to U.S. Treasuries at around 5.25%, right? So 5.25% forms the base. So one way to do this, which is one way to do this, it's not perfect, but it is actually very close, is to take that 5.25% and add it to 9.53%. And that would be approximately what you'd expect the interest rate to be for a triple C rated bond. So that's how when I keep saying 15%, that's what I'm doing to estimate what the triple C rated bond would be. So this is the high yield IOS spread, index option adjusted spread. So it's essentially, when you hear people talk about CDS or credit spread or what have you, this is what it is. It's the high yield spread. So it's only the part of the interest rate that comes from being corporate debt. You have to add to that interest rate the actual regular Fed funds rate, which you would add it. Let's just use 5.5 as the number so that everything is equivalent. Okay, so a 15% rate approximately would be a fine estimate. There's more mathematical ways to do it than this, but let's just go with this. Okay, so if you were to get upgraded from triple C to single B, let's see if I can do that. Okay, then your rate goes down substantially. It goes down by 3%. Okay, so interestingly enough, so you can kind of see that there. So just in case you're like, where is she looking? I'm looking right here. Okay, and you can kind of see that these things vary over time. Right now, we've been very lucky. You know, single B shot up right at COVID, and actually, this is not so wide. It's because we haven't seen a lot of defaults. A lot of things can change this situation in debt. Just kind of is what it is. But right now, it's 7 plus 5, which would be around 12 and change. Okay. And I'll come back to Jake, poor Jake. Okay. And then if we actually get to double, so this is where I think they can get to. Realize that the SOFR plus 5 or 6 is still underneath this rate, which means that they did a really good job negotiating. But in fairness, that first lien does actually get the bulk of any kind of situation if he went bankrupt. So it makes sense that they would be open-minded to doing something under 7 plus the risk-free rate of return or 5%. Okay, so then if we go to double B, the rate goes down. Sorry, that's the effective rate. I need the iOS spread. So double B iOS spread is 2. So if you can get from single B to double B, your interest rate goes down a lot. You know, so then you could actually renegotiate the first lien notes to a lower rate, and that helps shareholders. That's what you're trying to do. That's, you know, AMC went from being way, way, way more expensive than triple C to now they're right around double B all their debt, even though the credits are actually trading closer to triple C, and then so on and so forth. But the more of this that they get taken care of, the better for the stock, because the lower the potential interest rate is, interest expense is.
It's almost like an avalanche of success is headed their way if box office grows. There's so many different levers inside the business that can
help
add to improvement, including the debt refinancing, lowering the rates,
and if they can
increase merchandise, increase concessions. You just need bigger box office and a lot of doors start getting opened.
Or buy a lot of gift cards, guys. Buy as many. Think about gift cards this Christmas for your friends. That sort of thing.
All right, but let's be clear. Let's see if you say the same thing I say. Buying gift cards gives them cash, but it doesn't contribute to revenue until they're used.
That's true. But cash is king, right? So they could use the cash as a lower cost of debt, because you're technically loaning them money until they get the revenue.
Right. Okay.
It still decreases their blended rate of debt.
I would agree with that.
Yeah.
It depends on what your goal is. A lot of people think, oh, if I just buy $200 worth of gift cards, I'm going to increase the revenue this quarter. You might not. That revenue contribution might be a couple quarters out, but they do get the cash that they can use right then.
Yeah. It's a way of giving them a loan with no interest. And I'm all for that. And actually, deferred revenue came down a little bit relative to last year. There were a lot more gift card purchases. So AMC could use a few more gift card purchases as well if you want to support them that way.
I wonder why when people were saying AMC should sell wooden nickels for $1,000 and pay off the debt, why didn't they say, let's all go buy $1,000 worth of gift cards?
Yeah, you could have done it that way. It's a little bit easier.
We could have done it that way. We wouldn't have to have a worthless wooden nickel. I'm just saying. All right, what other questions you guys got?
1 more million loyalty programs. That's great. I didn't know that. Tech we love. Thank you for sharing that. I didn't know the numbers. I knew that there were more loyalty members, but I didn't know the numbers. That's awesome.
And that is important because over half of AMC's business comes from loyalty members. Did you know that? It's like 54% of admissions.
I didn't know it was 54%, but I would have.
It's in that range. I don't remember exactly. I'll try and look it up before I do my recap video. Did you want to take Jake's question?
Are we getting effed over again? I just want to know. I incurred life. Oh, poor Jake. No, actually, if anything, things are the refinance is really good. There's no. So the thing is, it's bankruptcy or refinance. Those are your two options.
Yeah, I'm curious. What is it specifically that he's worried about getting fucked over by? What, Jake? The new debt deal, or just in general?
I know that the dilution is painful for all stockholders. They have to get to a point where they pay off any type of debt. That's the other thing that I wish they would have clarified. It's not clear in all of the notes, but it could be the case that there are no additional covenants on any of the refinance. I'm pretty sure there's no covenants on it. There wouldn't be on a line of credit. That's weird. But because the Odeon stops you from issuing from doing a dividend or a stock buyback. Of the two, you guys know where I fall out. Stock buyback.
Yeah, but May, I'm going to go against you here. I don't think they should be talking dividend or stock buyback until the balance sheet's fixed.
Okay, I'm all right with that, but at the same time, it kind of depends on how low the stock price goes.
Okay, for buyback.
For buyback.
All right, maybe we could have some middle ground there, May. But I don't even want to contemplate the stock price going that low that they're like tempted to buy it back. Yeah. I think they should be utilizing all their cash to get this debt paid off, get the balance sheet fixed, and then when we're out of the woods, all right, now you want to talk returning equity to shareholders through buying back shares or issuing dividends. I won't complain as much, but. God damn, I mean, it's painful to go through all this dilution and then just watch them give the money back.
So my thoughts are as follows. Number one, they got to pay the debt back. And at a minimum, the Odeon is still like 400 million, I think, or something like that.
I have it here, 400 million. Yes, ma'am.
So they still have to pay the Odeon back. So if they pay back 400 million, they pay back 400 million. We're on the same page there, right? Yep. Okay. They still have operating leases that are outstanding. They're going to have to pay those guys back eventually, or those guys will get really pissed, right? They still have a bunch of stuff that has to just get paid back.
Are you talking about the deferred rent?
Yeah.
$40 million.
Oh, I didn't realize it had gotten that low.
He said 40 million, and they plan on paying 5 million of it this year, which seems weird to me. Like they must have a really good deal on the. Like, why aren't the landlords clamoring to get this? It's only $40 million. Well,
if I agree with you, the notional value should be enough where they just pay it, and maybe they will pay it. But my suspicion is that the landlords probably if it's about I mean, right now they're running so tight. Like you and I have talked about this before, but a lot of people don't necessarily appreciate how little cash they have to run this business. I mean, they're negative working capital, you guys, which means even though the numbers cosmetically might look really large to the
770 million. Woo, yeah. They're rich.
But they've got to spread that across all of the theaters. And when you look at working capital, it is negative, which is bad. And there's not a lot of extra on the other side. They really do need they need more money as far as that goes.
I feel like I've beat the working capital horse to death for the last 2 years and nobody's listening. They don't get it.
Yeah. It's okay. Working capital is very difficult. It's just current assets minus current liabilities. but at the same time, you
It,
can't.
it literally means if you're first time here, how much cash do you have to pay your bills due in the next 12 months? And
Yeah,
AMC's been stuck at a negative number, a
long
huge
time.
negative number, and it's getting better. We're almost to the point of fixing it, right, May?
Yeah, I mean, to fix it, you need free cash flow positive for a period of time. So you'll go free cash flow positive first, and it'll build up your cash reserves. Or alternatively, you just pay down so much of the debt that certain parts of the current liabilities are gone, which is part of what they've done. So we have reduced current liabilities only because, and it'll look weird because at first it'll look like it's not moving. But that's because when you pay down debt, you do have to pay any residual interest that's due. You will have to pay the banker's fee, all that stuff. But eventually, the current liability number will go down, probably by next quarter, is my guess, because I think some of it's probably booking this quarter. No, that's not true because the deal was done subsequent. So next quarter, your current liabilities may look a little strange, okay? But by the fourth quarter, the effect of the debt refinance should work through working capital and reduce current liabilities. I believe that's correct. If somebody disagrees, feel free to post it. If I'm off by like a few months or something. But you really need revenue to go up so that you can get free cash flow up. Okay, so that's Q3, Q4. We'll see if that's any good.
Let's see what the current assets minus current liabilities was on this latest balance sheet. Hang on one
I'm
second.
so bad. I looked because I was like,
Oh, you already know. What's the answer?
no. I know it's still negative, but I don't remember the exact.
All right,
number.
hang on. I'm scrolling up here.
And you have to subtract out the subtract out the deferred revenue because that's a weird way to that's a weird way to add it back in. I mean,
All right.
with and without is how I usually think about it.
Current assets, just raw numbers, May. Is that right? 100 million?
No, something's not right. Here, let me scroll.
Oh, wait. So, wait. Sorry. 1 billion, 1.07 billion.
That sounds right.
All right. I'll just put it on the screen here. I was focusing on the white, and it says, so total current assets, 1.07.
Yeah.
And then we go down to current liabilities.
1.651, and then subtract out the 311. Is it 399? The deferred revenue, yeah. So then it's like 400 million less. So call it 1.2. So we're close. We need to come up with 200 million more in cash.
I mean, but we were looking at numbers like $700 million in years prior.
Yeah. So we're close. So if you run a 200 million positive free cash flow, or if you run 100 million free cash flow next year, this will tighten. And then in next quarter, and then if you do it again in the following quarter, then you've got a shot at this being at least working capital neutral. And then if you keep having free cash flow positive, this working capital would be finally the way that it should look.
And for my viewers, the more new retail investors, I've done a video like how to read a balance sheet in 5 minutes. This is something you should look at on every company. If first time to look at a company, you want to look at the income statement. Is their revenue growing? Are they profitable? Then go to the balance sheet and look at how's their working capital. Do they have more current assets than current liabilities? Good. Do they have upside down like here? You got a problem.
Yeah.
So you don't need to be an accountant. You just need a couple key little things to understand a play. And we still got a problem here. So
yeah, we still have a problem. If they can get the accrued, so the free cash flow, what you would use it on most likely. So first of all, if we go to the cash flow statement, just so you can kind of see how these connect for the folks that are still trying to learn this. If you go to the cash flow statement, then half this stuff is going to be helpful. So deferred rent, so in liabilities, the accrued liabilities line, what's helping them right now, deferred rent, the landlords are being chill. So that deferred rent portion, they're benefiting. So, okay, just to go back, if we go back to current assets minus current liabilities, we're saying there's a gap of about 200 million ish, call it 175, right? So if you look at what is accrued expenses and other liabilities, a huge portion of that is deferred rent. And so we've just been lucky that the landlord is like, okay, or the current maturities of operating leases. So you've got the current operating leases and then any accrued expenses that are not current maturities of the operating leases going on and finance lease liabilities. Okay. So those two things, if you get those down, and that's what you use the free cash flow for, to try to get the working capital to work itself out.
This is what we're looking at on operating cash flow, negative 200 million.
Yeah. So we need that to be positive, and it needs to be positive enough to get rid of anything else that we're doing in capital expenditure. So the 95.1, we will need to make at least 95.1 to be so we'll need at least 90, we'll need the number in yellow to at least be 95.1 in order to be neutral free cash flow. But
Okay.
I'm hoping that it's actually flipped to the other side, like we're closer to 175, 200 on operating cash flow, such that when you subtract the 95, you have about 100 million that you can use to work on that current assets minus current liabilities gap that's going on. That's what I'm hoping for. And I think that he was so happy on the call. You have a shot that that might be true.
He was definitely happy. I mean,
happy.
I detected a level of optimism I haven't seen in a while. And I'm sure getting this debt deal done was a big weight off of their collective backs. They've been putting in a lot of work, a lot of time trying to get this done.
Yeah. So if he saw if he saw June and, we have July more or less at this point. So if he saw those two numbers come in super strong, such that he feels very confident that this number, the operating cash flow minus the CapEx, which is going to be the easiest way to calculate free cash flow, if he saw that was already positive, then I can see why people are going to be allowed to take vacations next week because they deserve it, because that's really hard to make that positive given everything that's happened. And also it means that the spread that we have right now in working capital, that 200, should go up pretty aggressively, and we're finally on the right track.
Tech We Love says, wouldn't a dividend bring new investors? I mean, it's a multi-layered question, because yes, some people might see a dividend and say, oh, interesting, I'm going to buy this stock. But your normal investors or your institutional investors are going to be looking at the balance sheet, looking at the cash flow statement, looking at shareholder equity, any ratio that measures return on assets, return on equity, return on invested capital. A dividend's not going to get them over the hurdle just yet. For a retail trader, it might be, but it's not enough, in my opinion. What do you think, May?
No, I'm with you, because remember, when you look at financials, when you issue a dividend, you're straight giving out money to you're just giving away money. Your book value goes down. Period. There's nothing positive that happens for a dividend. It's except
we're trying to fix the balance sheet, and by paying a dividend, you're reducing cash. Which negatively impacts all the ratios we're trying to fix, which is why I'm not in favor of a dividend at the moment.
I know that folks want it because the shorts then have to cough up a dividend pretty aggressively, and that's painful. So I kind of feel you on that. But stock buybacks should accomplish approximately the same thing.
Yeah, you see, who was it? IMAX. They've got an aggressive share buyback program going, and they said they're going to continue doing that. Plus, they had some optimistic outlook for the next year. And what happens? The stock price goes up. So I hope at some point AMC gets to a point where they can do share buybacks. I should have mentioned that the other day instead of using the RS word. I was just trying to think of how do we reduce the float that benefits us? Share buybacks probably a better way of doing it.
Yeah, if you think about it this way, if you do the share buyback, right, and the shorts continue, so let's say we fix the balance sheet and the company is no longer in any kind of dire straits. Like even if it gets to, I would be thrilled even if it got to double B, because double B is already a huge improvement from where it currently is, and your interest rate is now like 7-8% if you go to a bank, right? Okay, if you got to that level and then you did a share buyback, realize that what would happen is that the shorts would literally be selling the company back to you at a price that's really low at that point. You know what I mean? So every single time the shorts a stock and the company buys back the stock, you become a larger percentage owner of AMC. So then, yeah, that's how your whatever holding of AMC becomes a much larger percentage of the company, is the shorts continue to do their stupid. So, I mean, so to me, that unambiguously, then at that point, if the company's not at any risk of bankruptcy, has actually fixed itself and is well on its way to recovery such that it goes back to the period before. And remember, what he told us on the call was really relevant. He makes 50% more per person that walks into AMC. So if you run an $11 billion box, which everybody's been all like, oh my God, the box is never returning. If you run an $11 billion box, you're back at the cash flow that you had in 2019, which was $500 million in, no, it was like $600 million in operating cash flow in 2019. And the only problem is you had 500,000 in CapEx. So you didn't have that much free cash flow. But if you're at 500 million in operating cash flow and you're running a $250 million CapEx, that's $250 million per year to buy back stock to increase the shareholder stuff. This is only $1 billion stock, okay? You know what I'm saying? It's like you would be buying back huge amounts of stock, and the shorts would just be giving you back your company in a beautiful way. Then, yeah, short it all you want, and if the stock doesn't go up, just give it time.
Yeah, I hope they're good. If we get in that situation, I hope they're good stewards of managing the CapEx, and they don't get like this shopping spree, like, oh, let's go upgrade all our theaters. No, Adam, keep it real. Get this shit fixed.
Nice, chill.
Let the price run up a little bit. Then you can go spend your money on CapEx. But no, we need a bit of recovery and some, as they mentioned today, some careful husbandry of the cash. That's what I'm watching for.
Yeah, we didn't talk about that, but that's an excellent point. He was really sensitive to name a bunch of really cool things that he was not going to do. So I give him credit, because I think that's the biggest fear, is exactly what you just said, which is he goes on a spending spree as soon as he gets free cash flow positive.
I would not be very happy to see that. I'm going to be honest.
Yeah, it sounds like he was reiterating he will not be doing that. So good. I am thrilled. That was a good part of the call for sure.
And they also got to be thinking, May, like they're approaching their cap on shares, and they probably don't want to blow their last 100 million shares either. Yeah. So it is incumbent on them to manage the cash they have wisely.
Yeah. So I'm happy with this, but we'll see where the market goes.
pray to the gods, both old and new, that box office continues to grow.
Yeah. No more strikes is really what I'm praying for.
We dodged a bullet. I don't know if you heard about that craft services strike that was going to happen at the end of July.
You were telling me about that, and I was curious how that was.
That got resolved. So
yes. Thank goodness.
The gods were on our side.
Yeah, those people work hard. They deserve to get paid. But can we just have one full year where everybody is chill? That would be really great.
I think we got them all out of the way now, May, till 2026. So we got 2 years to make something happen.
YOLO keeps asking about Odeon. I agree with you. He just has to keep making more money than he can pay the Odeon. Fixing sinks, toilets, water fountains.
Yeah, they spent about $36 million on maintenance CapEx, if I remember correctly.
Yeah, tech we love. That the things that you're naming are maintenance CapEx, and it should be covered within the $250 million.
What I don't want to, they spent $44 million on CapEx this quarter, May, and their run rate is, they're saying about $220 for the year.
225 in the high end.
So, I mean, they're being budget conscious in a slow quarter, right? $44 million is low. on a run rate of the year of 225. But that you got to spend something on CapEx to keep the, like he said, keep the toilets fixed and such. But what I don't want them to do is go on we're going to refurbish a bunch of theaters, 100 theaters. Then you get on a different, that's CapEx too, but what do you call it when it's not maintenance CapEx?
Growth CapEx.
Growth CapEx, yeah.
So the conversation he was having about the leather seats at the
Burbank Theater,
that would still be technically growth CapEx. It's actually interesting because the seats are in such poor repair that they need to be replaced. So it's kind of, it's on depending on how the accountant wants to think about it.
I don't mind that on their best theater. Look, if that's your number one revenue theater, make sure it shines, right? Yeah. I don't mind that. I just don't want to see this nationwide rollout of taking all the crappy theaters and putting leather seats in them. No. Be judicious with your money is what I'm saying, Adam, if you're watching. Sean. They're not watching me. but maybe one of their interns is. So. We're watching you for managing that cash. We don't want more dilution, and we don't want another reverse split. Can we be clear?
Seriously, a large wine glass, a large format wine glass. You'll know if you could do this with the wine glass. It's funny.
Tech We Love says, hopefully my theater is not the next one to close. I think usually the warning signs are they're not taking care of the theater.
Uh-oh.
I don't know I don't know where he's at, but like when you see maintenance start getting deferred, you're probably on the chopping block.
Oh no, Tech We Love. Are you in a big city or in a tiny place?
And by the way, ask your manager, how long is the lease on this building? That'd be another good way to know. How long do y'all have a lease on this building? I don't know if they'd tell you that, but I bet a manager would. I bet he wouldn't know any better not to say anything.
It's a good question. But
all right.
You know
I need to go get some food, May, because I've been sitting here for 4 hours now. But we'll take one more good question from May's audience or mine.
Yeah, is there anyone else that salad bowl of grape juice?
I'm gonna put in my just my review real quick. I don't know if you saw my live stream, but we went to go see Trap, the movie, last night. And AMC has a new popcorn called Nashville Hot Popcorn.
Ooh, is it good?
You know, they have plain, they have buttered, they have cheddar, and they have caramel. Now we have Nashville Hot Popcorn. Guys, this stuff is fire.
Wow.
It is fire. But what I did, May, was I had them blend it 50-50 Nashville Hot Popcorn and cheddar. And that was very pleasant. And I also had people message me.
I always get regular popcorn because my hands get gross.
You get like non-buttered, just plain salted?
No, I add a lot of butter to it. And then even that is kind of gross, but I can't imagine having cheddar like I'd have to
I mean, you do got don't put your hands on the seats and then lick them. No, don't do it. But if you like really spicy popcorn, I think you're going to like the hot popcorn. I don't like it that hot. So I was going to say some people said they enjoyed mixing it with the caramel, which I didn't think of. But y'all try that out and let me know what you think if you see it in your area.
Very cool. All right.
Mad Ride says, how many times have you seen Deadpool? I've seen Deadpool once. I've seen Twister once. I just saw Trap, and we just saw this week, Monday, we saw Despicable Me 4. Yesterday, we saw Trap. So I'm out of movies to see. If I go see something again, it's going to be Twister or Deadpool. So maybe this weekend. I think Deadpool's easily worth multiple viewings because there's just so much going on.
He's so good.
All right, May, you got any final thoughts?
No, I love that everybody's going to go check out the movie theater this weekend. That's awesome. And I guess that'll be it.
Go see Trap and let me know what you think. It's a fine movie. I don't think it's going to be $1 billion movie, but it's enjoyable. And the best thing you guys can do, really, if you're trying to support the company at this point, is buy a ticket, go buy some concession, buy food, buy drink. I think we spent, we usually spend 25 to 40 bucks on drinks, like, because we'll go buy a drink or two at the bar, and then another 30 or 40 on food. That's just two people, 50, 70 bucks.
Tony single-handedly keeping AMC.
I'm doing my best, guys. I'm doing my best.
All right.
That's several times a week. But, if you have the entertainment and discretionary budget to go see movies, that is important.
Yes.
It is important. Just buying the stock and sitting back and doing, not actually watching movies, although that is a plan and that will work, I think, in the long run. Revenue matters. Cash is king.
Bye, Chica.
Thank you, guys.
All right.
May,
Bye,
thank you for your time.
Happy weekend.
Take care.
Bye.
Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I